This is Alan Bush with ADMIS. In the stock index futures, we started out this market basically trading steady. Since then, though, we have seen futures advancing, even though we did have mostly bearish, on balance economic news. We did have the New York Fed's manufacturing index coming in on the weak side. Also, we had the National Association of Home Builders Index coming in weaker than anticipated. And yet stock index futures putting in a pretty good performance so far. We continue to believe that even though the Fed is tapering their quantitative easing program, that there still is plenty of accommodation in the banking system to sustain the bull market. So even though we have seen pressure over the last couple of weeks in stock indices, still believe that the bull market is intact and the main trend, of course, is still to the upside. Also today we are ignoring some bearish news in the form of those economic reports, and that should be viewed as a sign of strength. Over in the foreign currencies, we are seeing the euro currency holding up relatively well. We have seen more and more talk that the ECB could be easing credit conditions soon. Also, we are seeing some pressure in the Australian dollar, this after the Reserve Bank of Australia indicating that interest rates will probably remain where they are for the time being. This seems to be a bit less hawkish than what they had said previously. And also the dollar index a little bit better earlier in the day, trading now back to unchanged. We continue to believe that the main trend is lower for the US dollar index, as interest rate differentials, we believe, are going to turn more bearish to the dollar. And over in the interest rate markets futures, mixed to a little bit better. This market supported by weaker than expected economic numbers today. We feel that we are in a trend where global inflation rates are likely to moderate and the global economy is likely to see slower growth, all of which is supportive to treasuries. So I would look for higher here in the treasury markets, especially at the long end of the curve. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.